Have you ever wondered how to make money in stocks? Well, it's not as complicated or time-consuming as you might think. You see, the key to building wealth through stocks isn't about frequent trading or being glued to a computer screen all day chasing prices. Rather, it's about a more strategic and less stressful approach. The real money in stocks comes from three main avenues. First, owning and holding securities. That's right, just owning them and letting them do their work. Second, receiving interest and dividends, which is like earning a passive income. And third, benefiting from the long-term increase in value of the stocks you own. All these paths lead to wealth creation, but they require patience, a bit of research, and a long-term perspective. The real fortune in stock investment comes from a strategy known as buying and holding. How does buying and holding work? Well, it's quite simple and yet incredibly effective. It's an investment strategy where you purchase stocks and hold on to them for a long period, usually 5 years or more. But it's not about just picking any stock and holding on to it. The key is to select well-run companies that have strong finances, a history of being kind to their shareholders, and robust management practices. Imagine it like planting a seed. You wouldn't just scatter seeds randomly and expect a fruitful harvest, would you? Similarly, when you're investing, you need to plant your financial seeds in fertile grounds. These fertile grounds are the well-run companies. They have the right environment and the nutrients needed for your investment to grow. Now, why 5 years, you might wonder? Well, the stock market can be quite volatile in the short term. Prices may rise and fall due to various factors, but over a longer period, these ups and downs tend to smooth out. The overall trend for a well-run company is upwards. So holding on to a stock for at least 5 years gives it the time to overcome short-term fluctuations and grow in value. Let's take a hypothetical scenario. Say you invest in a company that's known for its strong financial health and good management. You buy the stock and hold on to it. Over the years, the company continues to perform well. Its profits increase, it gains more market share, and its stock price rises. After 5 years or more, you decide to sell the stock. The price at which you sell is likely to be significantly higher than the price at which you bought. The difference is your profit. This is the essence of the buy and hold strategy. It's about patience and faith in your chosen companies. It's about allowing your investment the time to grow and mature. It's not about quick profits but sustainable growth. So you've got your strategy. You know what to look for in a company. You're ready to hold on to your stocks for the long term. Now all you need to do is choose wisely and wait. If chosen wisely, the value of your stock will increase over time. Let's take a look at some success stories of buying and holding. High-profile investors such as Warren Buffett and Charlie Munger come to mind. They have made the bulk of their wealth by holding onto stocks and businesses for decades. But it's not just the big names who have tasted success through this strategy. Everyday investors have also amassed significant wealth by investing small amounts of money for the long term. Take the example of Ann Scheiber, a retired IRS agent. She turned a modest investment of $5,000 into a staggering $22 million portfolio over 50 years. Then there's the story of Grace Groner, a retired secretary who built a $7 million stock portfolio with just 3 $60 shares in 1935. These stories underline the power of patience and long-term investing. Remember, the stock market is unpredictable, and trying to beat the market rarely works in the long term. Before you start investing, it's crucial to understand how owning stocks works. When you buy a stock, you're essentially buying a piece of a company, thus becoming a shareholder. This purchase gives you a claim on part of the company's assets and earnings. Let's illustrate this with a fictional scenario. Picture Harrison Fudge Company, a thriving business with sales of $10 million and a net income of $1 million. To fund growth and expansion, the founders decide to go public, meaning they want to sell parts of their company to the public. This process is known as an initial public offering, or IPO for short. They approach an investment bank, which acts like a middleman between Harrison Fudge and potential investors like you. The bank's role is to determine how many shares of the company should be created and at what price they should be sold. In our example, the bank decides to create 440,000 shares, each priced at $25. So, what does this mean for you as an investor? Well, when you buy a share of Harrison Fudge, you're buying a piece of the company's profit. To find out exactly how much, we divide the company's total profit by the number of shares. In this case, the $1 million profit is divided by the 440,000 shares, resulting in roughly $2.72 per share. This figure is known as the earnings per share, or EPS. Now, it's important to note that this is a simplified example. The real world of stock investing can be much more complex, with factors such as market fluctuations, company performance, and economic indicators influencing the value of your stocks. However, by understanding the basics, you're already laying a solid foundation for your investment journey. Remember, investing in stocks is not just about buying low and selling high. It's about owning a piece of a company and, in a way, participating in its success. Understanding these basics will allow you to make smart decisions about where to invest your money. So, how do you make money in stocks? Let's take a moment to rehash the key points we've discussed. It's not about constant buying and selling or glued to a computer screen obsessing over every fluctuation in the market. No, the real secret to making money in stocks lies in the strategy of buying and holding. Invest in well-run companies with strong financials and a history of shareholder-friendly management practices. And remember, hold on to your stocks for at least 5 years. It's this long-term view that has led to the success of high-profile investors like Warren Buffett and everyday investors alike. The stock market may be unpredictable, but with a clear strategy in place, you can navigate its twists and turns. It's about selecting valuable stocks and holding on to them for years, allowing you to benefit from their long-term increase in value. With patience, wise decision-making, and a long-term view, you too can build wealth through stock investment.